Invoice finance has been around for years, however, its popularity has increased in the recent years. After the 2008 financial crisis, the use of invoice finance increased by a third, and since the turn of the millennium, the industry has grown by 368%. Regardless of its recent popularity, this cash flow solution still remains a mystery to many trading businesses. Hi everyone, this is Ash Ajaz, and in today's episode I will shed some light on invoice finance and answer some of the most common questions. Let's get started. Invoice finance is a cash flow facility secured against your unpaid invoices. An invoice finance provider can advance up to 95% of your invoice value. When the invoice is settled by your client, the lender will collect the balance from you along with a small fee. There are two types of invoice finance: invoice factoring and invoice discounting. I will discuss these in further detail in another episode. Invoice finance facility is simple to use. You invoice your clients for the goods or services provided. You then pass the invoice to the lender. The lender pays you the agreed percentage of the value of the invoice. Depending on the agreement, either you or the lender will chase the client to settle the invoice. You receive remainder of the invoice amount once settled minus any agreed fees. With certain lenders, you may need to commit to a minimum period for the facility. Basic requirements for invoice finance are: your business sells to other businesses, you offer industry standard terms, and invoices are raised once goods are delivered. Some lenders have a minimum turnover requirement to justify the cost of finance. It is best to speak to a financial advisor who can find you the lender based on your eligibility and requirements. Cost for invoice finance is made up of a service charge and a discount rate. Let's have a look at how these work. One part of the cost of an invoice finance facility is a service charge, which is charged as a percentage of your company's gross turnover. Typical rates are between 0.75 and 2.5%. A discount rate is similar to interest payments on a loan, and it is charged on the funds drawn down. This charge is calculated daily following the advance of money, which means if your client takes longer to pay, the cost will be higher. Typically, the rates are between 1 and 3% over base rate. Along with service charge and discount rate, you can also add bad debt protection, which will protect you against any defaults. Some of the benefits of invoice finance which makes it a popular choice are: invoice finance is more flexible than a business loan or overdraft, lending decisions against invoices are fast, funding grows in line with your business turnover. Typically, you can get greater levels of borrowing, and instead of waiting for your clients to pay you first, you can unlock your working capital to help you grow. Hope you found today's episode useful. Please do check out some of the other helpful videos on this channel. Do subscribe to this channel, and thank you so much for watching.